Welcome to the Economic Compass, where we navigate the complexities of today's financial world. Did you know that consumer prices rose by 3.7% in the last 12 months? That's a significant figure that impacts all of us. Our goal today is a deep, balanced dive into the current economic landscape and what the future might hold. We're not here to offer easy answers, but to explore the nuances, considering both the headwinds and tailwinds. We'll be unpacking key themes like inflation, the labor market, economic growth, and the ever-present global factors influencing our economy. It's a lot, but we'll break it down. And when we say balanced, we mean looking at the data critically, acknowledging both the positive signs, like robust job growth in certain sectors, and the concerning indicators, such as persistent inflation. Joining me today is Dr. Evelyn Reed, a leading economic analyst.
Evelyn, thanks for being here. It feels like the economy is pulling in a lot of different directions right now. Where do you see the biggest economic puzzle pieces right now?
Let's start with inflation. We've seen it moderate from its peaks, but it's still elevated. What do you see as the primary drivers keeping it sticky?
That's a great question. While supply chain issues have eased considerably, they haven't entirely disappeared. Energy prices, though volatile, remain a significant factor, and robust consumer demand, fueled partly by savings from previous stimulus measures, continues to put upward pressure on prices in many sectors.
And the impact on consumers is palpable. The cost of groceries, housing, transportation. How are businesses navigating this, both in terms of their own rising input costs and their pricing strategies?
Businesses are definitely feeling the squeeze. Many have absorbed some costs, but we're seeing more pass through to consumers. This leads to difficult decisions about product availability, staffing, and of course, prices. It's a delicate balancing act to maintain market share while remaining profitable.
And central banks, like the Federal Reserve, have responded aggressively with interest rate hikes. What are they aiming to achieve, and what are the potential side effects?
The primary goal is to cool demand, thereby easing price pressures. By making borrowing more expensive, they hope to slow down spending and investment. The risk, of course, is that they over-tighten and push the economy into a recession, or at least a significant slowdown.
This brings us to the big debate. Is this inflation transitory, a temporary blip, or is it here to stay in some form? What are the arguments on both sides?
Those who believe it's transitory point to the easing of supply chains and a potential normalization of demand as pandemic effects fade. On the other hand, persistent wage growth, structural shifts in energy markets, and the potential for sticky inflation expectations suggest it could be more entrenched. The truth likely lies somewhere in between, with some price pressures easing while others remain.
Shifting gears to the labor market. Despite inflation concerns, we've seen remarkably low unemployment rates and consistent job growth. What's the story behind these numbers?
The labor market has been surprisingly resilient. We're seeing strong demand for workers across many industries, which is great for job seekers. However, the labor force participation rate, while improving, hasn't fully recovered to pre-pandemic levels. This means there are still fewer people actively looking for work relative to the population size.
What do you think are the main factors influencing that participation rate? Is it early retirements, ongoing health concerns, or something else?
It's a combination. We've seen a wave of early retirements. Some individuals are still hesitant due to health concerns, and others may be reassessing their work-life balance and opting for different career paths or reduced hours. The Great Resignation or Great Reshuffle definitely had lasting impacts, shifting priorities for many workers.
And how does wage growth fit into this picture, especially in relation to inflation? Are wages keeping pace?
Wage growth has been strong, which is good for workers, but it's a key factor contributing to inflationary pressures. Whether wages are truly keeping pace depends on the sector and individual circumstances. For many, the real wage gains, adjusted for inflation, have been modest or even negative at times.
Looking ahead, what are the lasting impacts of the Great Reshuffle, and how do you see the future of work evolving, particularly with remote and hybrid models and the skills gap.
The shift towards flexibility is likely permanent for many roles. Businesses are grappling with how to manage hybrid teams effectively, maintain company culture, and ensure productivity. The skills gap is also widening. As technology advances, particularly with AI, the demand for specific, often digitally focused skills is increasing, creating challenges for both employers and employees who need to adapt and reskill.
Let's talk about the big picture, economic growth. We've seen some fluctuations in GDP. What are the recent trends and what's your assessment of the economy's resilience?
GDP growth has certainly moderated from the post-pandemic surge. We're seeing signs of a slowdown, but resilience is still present in certain areas. The services sector in particular has shown strength as consumers continue to spend on experiences. However, manufacturing has faced headwinds from higher interest rates and shifting demand.
Consumer spending is such a huge driver. How are consumers feeling and what's influencing their spending patterns?
Consumer confidence has been somewhat shaky, understandably, given inflation and economic uncertainty. While spending on services remains robust, consumers are becoming more selective with discretionary purchases, looking for value and delaying larger expenditures. Savings built up during the pandemic are being drawn down, which could impact future spending.
What about business investment? Are companies leaning in and investing for the future, or are they holding back?
Business investment is mixed. Some sectors, particularly those focused on technology and green energy, are seeing significant capital expenditure. However, higher borrowing costs and economic uncertainty are causing many businesses to pause or scale back expansion plans. They're being more cautious about deploying capital.
Evelyn, we can't discuss the economy without looking globally. Geopolitical events, like the conflict in Ukraine, have had ripple effects. How are these impacting global supply chains and energy markets?
The impact has been profound. The conflict disrupted critical supplies of energy, food, and raw materials, exacerbating inflation worldwide. It also forced a reassessment of global supply chain dependencies, leading some countries and companies to seek more localized or diversified sourcing to reduce vulnerability.
We're also seeing shifts in international trade dynamics, with some talk of protectionism. How does this affect the global economic outlook?
Protectionist tendencies can lead to higher costs for consumers and businesses, reduced efficiency, and slower global growth. It can fragment markets and make it harder for developing economies to participate fully. While national security and strategic considerations are driving some of these trends, they come with significant economic trade-offs.
What about the economic performance of other major players like China and the Eurozone? How do their situations spill over to us?
China's economic trajectory is crucial, given its role as a global manufacturer and consumer. Slowdowns there can impact demand for commodities and manufactured goods worldwide. The Eurozone, facing its own energy challenges and inflationary pressures, also has significant trade links with the rest of the world. Fluctuations in their growth and policies directly influence global trade flows, investment, and currency markets.
And currency fluctuations. We've seen significant moves. How do those play into the broader economic picture?
A strong dollar, for example, makes imports cheaper for the U.S., but exports more expensive, impacting trade balances. For other countries, a weaker currency can increase the cost of imported goods, including essentials like energy and food, feeding into their own inflation. It's a complex web of interconnected financial flows.
So, given all these factors, what are the prospects going forward? Are recession risks elevated, and what indicators should we be watching?
Recession risks are certainly present and arguably elevated due to the aggressive monetary tightening by central banks and ongoing global uncertainties. Key indicators to watch include consumer spending trends, business investment, manufacturing output,
and importantly, the yield curve, which has historically been a reliable predictor of recessions.
But it's not all doom and gloom. What factors could support continued growth, leading to a more optimistic outlook?
Certainly, a resilient labor market, continued innovation, and potentially a soft landing where inflation is tamed without a severe recession are all possibilities. Strong pent-up demand for certain services, coupled with ongoing technological advancements, could provide a boost. Also, if geopolitical tensions ease, that would remove a significant headwind.
And what about the role of government policy, both fiscal and monetary, in shaping these outcomes?
Fiscal policy, government spending, and taxation can either stimulate or restrain the economy. Monetary policy, primarily interest rate decisions by central banks, aims to manage inflation and employment. The challenge is coordination and timing. Effective policy can smooth out economic cycles, but poorly timed or misjudged policies can exacerbate problems.
Finally, on the horizon, we have rapid technological advancements like AI and green technologies. How might these reshape the economic landscape in the coming years?
These technologies have the potential to be immense drivers of productivity and growth. AI could automate tasks and create new industries, while green tech is essential for addressing climate change and creating new energy infrastructure. However, they also bring challenges, such as job displacement and the need for significant investment and workforce adaptation.
This is a lot to digest, Evelyn. For our listeners trying to navigate this uncertain economic environment, what are some practical strategies they can consider for their personal finances?
It's crucial to focus on what you can control. Review your budget carefully, identify areas where you can cut back if necessary, and prioritize paying down high-interest debt. For savings and investments, diversification remains key. Consider your risk tolerance and long-term goals, and perhaps consult with a financial advisor. Building an emergency fund is also more important than ever.
And for businesses, what are some key strategies for adapting to inflation, supply chain disruptions, and changing consumer behavior?
Businesses need to be agile. This means reevaluating pricing strategies, exploring alternative suppliers, and potentially diversifying product or service offerings. Understanding evolving consumer needs and preferences is paramount. Investing in technology that enhances efficiency and customer experience can also be a competitive advantage. Risk management and scenario planning are essential.
So, diversification and risk management seem to be recurring themes for both individuals and businesses.
Absolutely. In an environment of increased uncertainty and interconnected global risks, spreading your assets, your suppliers, your customer base, and even your skills can provide a crucial buffer against unexpected shocks.
Evelyn, we've covered a tremendous amount of ground today, from the intricacies of inflation and the labor market to global challenges and future prospects. It's clear the economic picture is complex and constantly evolving.
Indeed, there are few purely domestic issues anymore. Everything is interconnected. What happens in one part of the world or one sector of the economy inevitably has ripple effects elsewhere. Navigating this requires a constant awareness of the broader landscape.
The key takeaway for our listeners, then, seems to be the importance of resilience and adaptability, both personally and for businesses.
Precisely. Staying informed, being prepared to adjust strategies, and maintaining a long-term perspective are essential tools in uncertain times. It's about building robustness in the face of volatility.
Thank you, Evelyn, for your insightful analysis. And thank you to our listeners for tuning into The Economic Compass. Stay informed, stay adaptable, and we'll see you next time.